Hello. In this video, I hope to give you some insights into the EU and UK sugar markets. First, thank you very much to ECRUU for giving me this opportunity to participate in the innovative ECRUU Sugar Week. It's much appreciated. My name is Julian Price. I've been working in the sugar business since 1987, and you can find out more about me at my website www.julianprice.com. You might ask why the outline of my video has been written in Chinese. Well, I thought that the title of my presentation, Striving for a Transparent Picture with which to Navigate the Complexities of the European Sugar Markets, sounded like something out of Chairman Mao's Little Red Book, but actually sums up quite well what I'd like to achieve after all of this striving. And I'll break up my video into 6 parts, as you see on the outline there, beginning with the weather and prospects for the 2024-25 sugar beet crop in Europe. You might have heard about the Confucian proverb which states that forecasting the future is like driving a car with the windscreen fogged up and only the use of a rear view mirror. My thesis is that data transparency is vital for a healthy market via a rational allocation of scarce resources. Rationality is key. Sugar traders may be emotional creatures, but finance and risk management directors are not, and they're more likely to ask their traders and analysts, "Show me the data and let's discuss," before setting trading limits or authorizing significant trades. Emotion is, of course, a healthy thing, and mathematical models are useful, but these models are only as good as the data and assumptions fed into them. Garbage in, garbage out, as they say. So we need good data. So where do we find good data? Well, we're not short of excellent sources. It's bewildering. I'd like to mention, though, the official sources, the European Commission and the ISO, and aggregators of official sources, for example, Trade Data Monitor. Oh, hang on a second, I've forgotten one. I'll move out of the way. ECRUU! There! A fantastic source of data. Well, turning to the main topics of my video, and beginning with sugar production estimates for 24-25 in the European Union and in the United Kingdom. The area sown to beet in the EU and the UK for this year's campaign, 24-25, has increased by an estimated 7%, according to European Commission estimates published in July, and an estimate of 102,500 hectares sown in the UK. This would be the largest planted area since 2019-2020. Although many in the industry will insist that production estimates are premature at this stage, I think I can confidently say that the EU and UK sugar production will increase in 24-25. Drawing on as many sources of information as I can, and with a healthy dose of reckless optimism as we enjoy the fine late summer weather here in Cambridgeshire, I think that EU and UK sugar production may be 18.2 million tonnes in 24-25, an increase of about 1.4 million tonnes from last year. Of course, sugar beet sowing was delayed this year by around 2 weeks on average, and we must also be mindful of diseases such as mildew, cercospora, syndrome de basse richesse, SBR, virus yellows, notably in France, and there's still quite a bit of weather which will pass overhead and which could upset yields, notably sugar content available in beets. Beginning, if I may, with the beautiful country of Poland, Nord Sugar Polska, which began its campaign a couple of weeks ago, reports higher beet yields than the average of the past 5 years. The Polish campaign should end in the second half of January 2025. Next up, turning to Germany, the Sugar Industry Association, Wirtschaftliche Vereinigung Zucker, estimates that sugar production in the 24-25 campaign will rise to about 4.77 million metric tons, up about 13% from last season's 4.22 million tons. German farmers had increased plantings by 5.7% to 385,000 hectares in 24-25. Average to almost quite good yields are expected, although, as the plant breeding company Struber showed in its recent beet tests, the results are very variable depending on different growing regions and soil types. Turning next to France, the Statistical Service of the Ministère d'Agriculture de la Souveraineté Alimentaire, Agrest, estimates that the area sown to industrial sugar beet increased by 8.2% from 379,500 hectares to 410,700 hectares in 24-25. This estimate includes sugar beet areas sown for bioethanol production, which is maybe about 67,000 hectares, a steadily increasing share of the total. To equate to the Unica sugar-ethanol mix, which is now thought to be lower than 50% in Centre-South Brazil this year, the French sugar-ethanol mix is about 84%, about the same as last year. The climatic conditions this August in the French sugar beet growing areas are estimated to have been quite favourable. Beet tests conducted by CGB, the Confédération Générale des Planteurs de Betteraves, have showed nice increase in the root weight, which is estimated to be 9% higher than the average of the last 5 years. But the sucrose content of the beet remains low, at 16%, down 1.7%, compared with the richness one generally expects at the end of August. Overall, the yield per hectare in France of sugar is estimated to be around the 5-year average, with quite large disparities between the départements. Turning now to the Netherlands, the Kosan Beet Company estimates an average of 79 tonnes of beets per hectare and an average of 13 tonnes of sugar per hectare for this campaign, 6% below the 5-year average. The sowing dates were very spread out this year, which negatively affected yields. In England, the area sown to beet was estimated in June at 102,500 hectares, up 4% from last year, and the largest planted area for several years. The crop is progressing well, albeit with widespread but low levels of foliar disease, according to the British Beet Research Organisation, with a mixed picture across the country, especially in the north of England. Sugar production is estimated around 1.1 million tonnes in 24-25, after 1.078 million tonnes in 23-24 and 479,000 in 22-23, according to DEFRA statistics. The UK beet campaign will start down the road in Bury St Edmunds on the 16th of September. Looking ahead, the Kosan Beet Company of the Netherlands announced recently that falling demand for sugar, higher ending stocks, and falling prices have prompted Kosan to reduce the proposed allocation percentage by 5% to 100% for 2025, 10% than it was in 2024, when it was 110%. Kosan explained that they'd expected that sugar sales would improve this summer due to sharply reduced sugar imports from outside the EU. But, they said, in that wonderfully direct Dutch way, the reality is different. And they now expect lower sales volumes to persist into 2026. And hence, we may perhaps expect a fall in EU sugar production in 25-26 in response to lower demand, higher stocks, and lower domestic prices. Turning now to EU sugar prices. As we know, there are many series of prices. There's a wide variety of situations which are reported to the Commission: short-term contracts, long-term contracts, there are different qualities of sugar and so forth. And it's not been easy for the European Commission to maintain the transparency and rigour necessary to maintain series of prices on short-term contracts. But they have been maintained for the EU averages overall and in regions 1, 2 and 3. These price series have come in for a lot of flack. They're late, they're unresponsive, but really, to be honest, they're the best we're ever going to get. They're compulsorily sourced from processors and refineries, and they're based on monthly invoices reported every month with a 2-month delay, and they account for about 2/3 of EU consumption by volume. So they're really representative of what they are. Since November 23, I think should point out that the short-term contract series prices have been below the long-term average. Something we hadn't seen since the instigation of the short-term contract prices. I've noticed that little URL down there. That'll get you to my website and to my dashboard, where you can find the very same graph with the beauty of Power BI. And with Power BI, you can see all the prices, and you can write them down if you like. There's also more information there, for example, on retail price inflation by product category. For example, sugar, the average inflation rate for retail sugar in the EU of 28 member states is minus 5.1%. Prices are falling. However, they're not falling for soft drinks. They're risen by 3.7%, or breakfast cereals up 1.8% year by year, or confectionery products where inflation is running at 4.7% per annum. You can see that there isn't just one price for sugar in the EU sugar market, but lots of them, depending on the terms of each contract and on geography and many other factors. We can compare these prices in regions 1, 2 and 3, that is in Northern EU, Region 1, Northwestern EU, Region 2, and in the south and east of the EU, the so-called deficit areas. We can compare these prices to number 5 world market prices, and thereby get an idea of the import parity prices and also the value of INF 5 certificates for IPR sugar. And we can do better using official data, not proprietary data. For example, Eurostat, COMEX data, Intrastat data, Taxud, and the Office of National Statistics data, ONS data for the UK. Let's take Intrastat data. This correlates incredibly well with the prices reported by the EU Commission on the average reported prices, as you can perhaps see from that orange line. But the Intrastat data can be broken down by member state and by the UK. So, for example, let's see what prices are looking like in the Czech Republic. There they are. Or in Spain. Or in Greece. Or let's look at DC raws, centrifugal for all countries. Let's zoom into ECRUUs in Italy. Prices seem to be coming down a wee bit. Or let's move to Eurostat and prices for raw sugar for refining. Import prices seem to be coming down a little bit. As you can see, the quantities are also coming down quite a lot. Let's zoom in and see what ECRUUs from Mauritius. What's that looking like? Or maybe Guatemala. Not a lot of data there. Let's look at raw sugar from refining from South Africa, for example, or Belize. So you can see we can use these data to produce very detailed prices, and as I say, they're all different. But wait, there's more. Let's try and look into the future by means of the import license applications under the TRQs, tariff rate quotas, as reported by the European Commission and the UK authorities. We can see that applications have been really rather moribund of late, and even in April, a large quantity of erga omnes licenses were handed back to the authorities. We can see recent applications in August. Just 37,000 tonnes of TRQ applications were made. No doubt under the influence of the large quantities of sugar that were imported from Ukraine. But since June 24, these imports have ceased. They've ended. Let's quickly look at intra-EU trade flows, which again you'll find on my website. You can zoom in to where Italy is sourcing most of its sugar, Germany and France. I think we knew that. You can see the quantities and the evolution of the quantities. You can zoom in for external trade and find imports, as we see, really rather moribund, as discussed. As well as official sources of data, we can also look to aggregators of the official data, which are proprietary sources. And I'd like to give a big shout out, if I may, to Trade Data Monitor, who provide hard to get data. And I'd encourage you to request a demo and have a look. And I'll show you. Just give me a second. Okay, so we all know that Brazil has been exporting an incredible quantity. The stevedores, the freight forwarders, all of those guys in Brazil deserve our utmost respect. They've reached, I think it's about 36 million tonnes. We got 37,600,000 tonnes cumulative 12 months exports of sugar to the world market. But did you know that exports from Colombia, they've been falling? Exports from Guatemala have been falling a great deal more, whereas Guatemala was exporting up to 4.5 million tonnes a year. They're now down to well below 1.5 million tonnes. We can look further. We can see Belize, for example, again falling. Australia, hard to get data, rather steady exports. All these data and more broken down, if you like, by white sugar, raw sugar, non-centrifugal raw sugar. All of these data are available on Trade Data Monitor, and would encourage you to look further and see if they might be useful to you too. I should of course say that these trade data from TDM are available between countries, so you can see how much Brazil has been exporting, Thailand, Australia, Central America, zoom in, See regional trade flows in the Caribbean region, for example. Okay, I'd like to finish up by looking in a little detail at stocks. As we can see from that graph on the left, stocks have been rising gradually for the last 3 or 4 years. The latest data from the Commission shows stocks at their highest level since January 2020. Well, looking at these numbers in a bit more detail, we noted stocks are the highest June on June for the past 4 years, but actually since Christmas, the level of stocks has been declining, particularly those obviously held at the European sugar beet processors and their silos. But the really astonishing story is to see stocks of sugar held by the refineries declining precipitously, no doubt having been displaced by sugar imported from Ukraine. Well, that's it from me. I hope you found something of interest in my presentation, and I hope that you take away that there's such a lot more detail that I can and would love to go into with you. Perhaps if you have any questions, you may drop me a line, just send an email. My contact details are on the screen. It only remains for me to thank Charlotte and Oliver for having had such a brilliant idea, an innovative showcase of all the data and such like that's available, and to wish you all the best. Bye for now.